All right, good morning, ladies and gentlemen. Today is January 13th, 2021, and I'm back with another edition of the Wednesday live show. Lots going on, market hanging around at the all time highs, and crazy news cycle happening. But I think that I think that when I show you this chart of the S&P, that you'll see why sort of ignoring the news. I know it's hard to ignore the news, and honestly, I am not immune to it myself, but over the years, I've basically sort of trained myself to realize that the market obviously trades sort of independent from what's going on in real life in the world. And that should be relatively obvious because of the fact that the market's up at the all-time highs at the same time that we may or may not be in a recession. Unemployment is extremely high. There's a lot of potential risk out there, and it's interesting that the market doesn't seem to be pricing it in, but it is what it is. And so after seeing that enough times, I think back on all of the geopolitical type things in the past that temporarily affected the market, which was subsequently just shrugged off. And so, a lot of people nowadays are saying that the main driver of the strength in the market is the old "don't fight the Fed," which has been around as long as I can remember. And so, it seems reasonable to me if the Fed is, pumping $120 billion a month with interest rates at zero of liquidity, it's got to find a home. And of course, the inflation numbers came out this morning. We're starting to see inflation picking up a little bit, and gas prices have gone up. And so, it's going to be interesting. I think that the number one risk to the market is probably rising interest rates, right? And so there's sort of a tug of war going on because the Fed is buying bonds, obviously, and it'll be interesting to see if they can offset the market participants that at some point, if inflation does start to pick up, which seems to be a theme. It'll be interesting to see if the Fed purchases can offset the what used to be called bond vigilantes. So anyway, there's the S&P. Basically this trend line that I drew some time back and have adjusted a couple of times is, I mean, it's really just meant to sort of show the angle. And here's the funny thing is that, market broke out of this trend line here. And when was that? That was back around the beginning of November. And basically, it's just been sort of cruising, right? Now, interestingly enough, when you have a trend line like this, you see how it pulls away from the trend line and then came back down, touched it a couple of times here. And so when it's getting extended from this trend line, it's since the beginning of November, it's tended to kind of come back towards the trend line. But as long as it's above this, and you can see it's a series of lower or higher lows, right? So that's why the trend line's sloping up. So I try and draw my trend lines under the absolute lows of recent actions. So there you go. All's good. Market could pull back to this trend line. The thing of it is that it would take. It seems like everything's just sort of on autopilot, and it would take one heck of a sell-off to really sort of rattle everyone's nerves. And I mean the complacency of the market, and we're back to the whole idea, which has been the prevailing sort of thing over the years. Honestly, the prevailing sort of sentiment has been that the old Tina. There's no alternative to stocks, and so that's uh, that's what everybody thinks. Everybody's thinking, there's really no alternative to stocks, and and you could also argue that countries with like I think it's like Venezuela's got like some crazy inflation, and their market goes up a lot, and so people are starting to realize that everything's in relation to purchasing power, right? So um, been seeing some notes about how the commodities are starting to break out. Corn, I think, was up big time yesterday, like 5%, and wheat and all that. So, um, see if there you go, DBA. That's a agriculture ETF. I hadn't looked at this in a long time, but this thing's actually been has been sort of going up. But you can see, um, I don't think I can pull up the CRB index here, but there you go. There's agriculture ETFs. Basically, just about anything that I look at nowadays, anything I look at, if you start back in the summertime and look at it, it's just trending up. Everything's going up. So that's is what it is. The Russell 2000 has been outperforming the other indexes, which is honestly, it's a sign of a strong market. Now, it could be construed as signs of speculation, obviously. So there's been a lot of this was the old all-time high from back in 2018. So the IWM, the Russell 2000, underperformed for a long period of time, and then it broke out here recently in November around the same time and has been trending up. So you can see I got this trend line drawn across like the two absolute lows. You can see it's kind of extended. So yeah, we're in sort of a weird environment right now, but I've been saying that for years. It's always sort of a weird environment, and the cool thing is that the system itself is like our system that's running the swing trades behind the scenes is impervious to all of the nonsense and the news and just about anything because obviously it's an algo that's built with code and numbers, and so it's going to be completely 100% objective. And so anything that I can discuss regarding fundamentals or the market itself is has absolutely no relevance to what's going on behind the scenes with the system because it's looking for stocks that are exhibiting certain price behavior on the charts. And that's basically it. And so through the ups and downs and the good times and bad times, and no matter, what's happening, the system is going to keep looking for stocks that meet certain criteria as far as price action. And so it's 100% objective technical analysis, which is good because whatever I think the market's going to do is not relevant because it seldom does what I'd like it to do or what I think it's going to do. So anyway, let's dive right in here. We got a couple of actually a few new open trades, and the three up here at the top you can see have been opened this year, and then the three older ones have been open for a while, since last year, right? And you can see the percentage gains here, and so we'll take a look at these real quick. And the first one, the mRNA, is kind of it's actually an interesting example because I've looked at it on the pending list the past couple of weeks, if you caught the shows, and you'll remember that it's funny that I drew this last week. I was talking about how this stock was setting up, and I guess a couple of weeks ago it was on the list, and the trigger was way up here at 132, and I think I drew this trend line at the time, and so the price would have been down here, and I was using this as an example of how the trigger price, like when a stock first hits the pending list, the trigger price typically starts off sort of way above the price, and it's designed to sort of meet the price when there's a change in trend, right? And so lo and behold, there you go. And the funny thing is that when I did the show last week, I actually had this line here. It said 120, just like this little line here, and lo and behold, we got that trend line break, and it triggered in over here, and so there you go. There it is. Pretty nice looking pattern, honestly, and interestingly enough, last week I drew this horizontal support line to sort of demonstrate or sort of show where I thought the major support was, and it was bouncing off of that. So that was Thursday, Monday, Tuesday, Wednesday. So this was last Wednesday right here, and the price had sold down, bounced right off the support. It was starting to poke through the trend line, right? And trigger price was sitting there at 120, and basically we were looking for a close over the trigger price because that's essentially our confirmation. Confirmation is, and so here's the thing is like, trend lines like this can get broken, and then the price can, bounce around a little bit and then just, roll right back over and keep going down. And so, the only thing that we really have as sort of a confirmation of a change in trend is a close over the trigger. And so there you go. There's the close over the trigger. There's today's open, right? So this is actually triggering in today. I'm going to go ahead and take this off the chart now because it's no longer relevant. It was an example, and so we'll see how it goes from here. Nice potential change in trend, right? And so what I wanted to point out here, which is extremely interesting, is that the initial stop here, I've got it, it's actually a little low on the chart. So it's 102, which is kind of like right at, I didn't want to take this line off the chart that I drew last week, the support line. So basically there's the there's the initial stop. This low right here is 102.66, and so the low in this particular case is going right below the pattern, so it makes perfect sense. I mean, we're either seeing this change, we're definitely seeing a change in trend. I mean, that's kind of obvious, and so the big question is whether that continues and carries and we form the cup, or whether it's not able to hold this support and it breaks down. And so that's obviously no one knows, right? There's no, but the thing of it is that this is seems like the most reasonable place to set the initial stop anyway. Now, of course, you could go a little bit higher with it, and over the next few days, if we get some forward progress, well, that stop will ratchet up relatively quickly. If we get sometimes you get the change in trend, and then you get a little bit of push back into there's like a sort of a zone here now, right? So it's got a good look to me. No guarantees, but that's why we use stops, right? And so that was kind of the idea. Interestingly enough, and the funny thing is that Pfizer, same sort of thing. It had a really nice, sell down and sort of a cupping pattern, right? And for whatever reason, it is sort of fallen back into this sort of sideways channel here. So, here's the thing is it looked really, really good the day that it triggered in, right? Which was, well, let's see, I guess it was Monday, yeah. So Tuesday morning at the open, it would have triggered in. It had that really nice sort of rounding bottom to it, and even yesterday, I mean, sometimes first day they pull back, but today's not looking so hot, but it's early in the day, and who knows? So, but look at this. I mean, there's a $1 stop loss here, right? So it's pretty low risk. And the nature of the system, obviously, is that, it tries to identify the change in trend, waits to confirm it, and then obviously there's a failure rate, right? And so some stocks, they just they attempt to rebound after a pullback, attempt to, obviously this thing's in an uptrend, right? It's like a longer term sort of uptrend, but we're playing like sort of the short cycles here, whatever. So anyway, it's a pretty low risk sort of trade. And the other thing is that let's move on to Walmart here. Yeah, so here's an example of, and look what happened here. It got a little bit choppy. Well, actually, it looked pretty good, but it got a little bit choppy, right around the point of entry there. But if you zoom out a little bit further, you see that, the change in trend on Walmart was unmistakable, or it's unmistakable now that it's obviously that it's come up close to the target. So, this target right here, the high yesterday was 149.93. And so this sometimes on these charts the precision is a little bit difficult, but didn't quite make it up there to that target. However, it's looking pretty good, right? Kind of a big gap up yesterday, and here's something else to note. I haven't drawn this on here yet. The trigger was 146. This open was 146.60, and so I might as well go ahead and put the actual compensation target is what I've been calling it. Whoops. And what that is it compensates for that little bit of a gap up. So, and we're talking 60 cents on a $150 stock, but it's still, it's still kind of important because that's sort of the strategy is that, and that also basically prevents us from being too concerned about little gap ups. So the C target is 150.60. You basically add 60 cents to the to the fill there, or the potential fill. So Walmart's pretty thick, obviously, extremely heavily traded stock, and so and here's the other thing too is you don't have to dive in immediately at the open, and so there's potentially, let's see if I even have this in the right place. Potentially, you could have gotten filled back here this day on January 5th, anywhere in this area, anywhere between the open and the actual trigger price. So no big deal. You just add that to the target, and that's where you're looking for the stock to run to take some profits, take some off the table. Typically, you want to take half off the table at the target, let the rest run. And so we don't know. And see, that's the beauty of scaling out is, I'm trying to get that consistent, but Walmart could easily be, starting another run here and headed back towards these highs. And we just don't know. And so that's why it makes sense to take some profits along the way. Right? So anyhow, it is what it is. I'm noticing this would have been the last earnings here. So with earnings season pending, earnings season's coming up, I suppose. Probably starts next week. That's going to be another consideration of some of these trades that open, but we don't have to start worrying about that yet. I'm looking at the open trades in my Thinkorswim, and none of them actually have the date where it says that they're going to come out with earnings. So typically Thinkorswim starts populating that a couple of weeks in advance, and I try and keep track of it. So Moving down the list, so those are the three that have just gotten opened here, right? Recently, like this year. And so the other three have been open for a period of time. So let's take a look at that. MOH, boy, that was interesting. We looked at it, for a while there, and it was just sort of trading sideways. Trigger was over here, and you can see that it triggered in. The reason I had it over here, I had it zoomed out so that we could see sort of this breakout above here. Triggered in a little bit before the breakout, which is fine and normal. And interestingly enough, it put on this humongous long range day. And so the trailing stop was basically just under all this congestion. And then after, some follow through in the long range day. And so basically the trailing stop has moved up here, and it's protecting basically the midpoint of this. I think a long time ago Jeffrey did a training about price volume crescendo and long range days and that. And a good rule of thumb is, and this is way back before he even programmed this system, but a good rule of thumb was to protect the midpoint of a long range day, especially the following day, right? The following day, a lot of times, like you get, and then for this particular stock, I mean, this was significant. If you look at the chart, I mean, there was a couple of them back over here, long range days, but this has been the longest range day in well over a month. And so it's not a bad idea to protect the midpoint of the long range day. Good rule of thumb there. So looking pretty good. I mean, obviously, it's made this big move, and now it seems to, I'm looking, it's down a couple of percent here. And so, there's just no telling. I look at something like this and I'm like, oh, it's all over. And sometimes you just get like these little sort of pullbacks, and then it'll stabilize, and then you get another move higher. So just because it kind of looks like it's toast doesn't mean that it's gonna give all this back. So that's pretty good place for a stop, I would say. Obviously, you have the discretion of using a tighter stop. And so if I wanted to use some discretion, I'd probably, I would probably have been, looking at the low of this. Sometimes when a stock goes parabolic like this, I mean, it's going to give some back. And so, as I've mentioned before, the system is designed so that the trailing stops like hang back far enough so that you don't get knocked out on normal price fluctuation, because the idea is to stay in it, as long as possible, right? So moving on, and we only have a couple of more here, so I'm gonna try and make the show kind of brief today. I know I always say that, and then I end up, I look at my clock and an hour flies by. Time flies when I'm looking at charts and talking, but here's a pretty good example of like what can actually happen when one of these trades moves in our favor. And the funny thing is, you can't just like look at the chart or whatever and say, hey, the one we just looked at, the MOH with that big long range day, almost looked a little more impressive than this one, up till obviously until today when it started looking like it's rolling over. But the funny thing about this is that this thing, as of yesterday's close, was up 35%, right? 35% from this entry here at, let's see, the trigger price was 45.75, and so this would have been right there, would have been the day that it triggered in, right at the trigger price. These little arrows, there you go. The funny thing about these arrows is on these charts, you can only drag them to like in between the price bars. So anyways, that's perfect. In between the price bar that it triggered in at and the actual entry. So, but I mean, obviously it's an impressive move. And you can see this is another good example of where stock triggered in and then kind of had a had like a week-long pullback. And so until this bar formed, like this reversal bar right here, the initial stop was just sitting there. And I've seen some like this where the initial stop just basically sits there and sits there and sits there. And the idea obviously is it was allowing for normal price fluctuation without getting knocked out. There would have been nothing worse than getting knocked out on this day right here, right before it actually made the big move, right? And you can also see that, here's a case where the initial stop was above the low of the pattern. And so I don't know exactly how the algorithm decides whether to put it at the just under the dead low of the pattern like it does on some of them, or above that, but it's based on the ATRs of the individual stock. But anyhow, you can see this one hit the target, and then it looked like it was going to reverse. So the thing of it is, this particular stop would have come in over here, right? So I just draw these things to illustrate where the stop is currently, and I don't make a point to start them at the exact point where, because they're difficult to draw. Sometimes this charting software is not extremely cooperative when it comes to this stuff, but it works pretty good. But anyhow, so as we sit right here, I guess I could extend this over here, but I just wanted to see how that moved. That's what I'm talking about. It doesn't necessarily like to stay exactly where you put it. Anyway, long story short, this particular day right here, that's sort of, that was a bearish engulfing candle, right? Pull up a candlestick chart, and outside reversal day, which typically means that a stock's going to reverse. The move is over, and then look what it did the next day. It just gapped right up and just sort of ran away, and still going as we speak. It's up 2.25% here, and of course this is one of the EV stocks, and really super hot stock, and there's a whole bunch of them that have really just been on fire. And I talked about that last week. Why all these alternative energy stocks, no huge mystery if you pay attention to the news and what's going on the CNBC. But anyway, we were fortunate enough to have the system pick this one back over here right after this nice little sort of pullback and pivot low, and so it's off to the races. And my guess is that this stops probably. See, here's one thing that Jeffrey always tells me, the way the system is designed, and I know you've seen this before, is as time goes on, the trailing stop is going to sort of accelerate, right? So I don't know what the details of that are, but a lot of times the trailing stop's going to hang way back, and it seems obvious. Here's the thing. Obviously, you would not want to see this stock go from 63 to 49 and get stopped out, but the likelihood there's almost no chance of that happening. And so what'll happen is this trailing stop will begin to ratchet up relatively quickly. It wouldn't surprise me to see this thing come up into the mid 50s after today. And so don't always don't be concerned that the trailing stop, especially once it starts ratcheting, is too far back, because there's literally like almost no chance of, unless there was like some crazy bad news or something, or a market crash, but there's literally no chance of this trailing stop getting hit at 49, because it's gonna move up, right? And if this thing gets some forward progress, it wouldn't surprise me, like if it continues to go up, it wouldn't surprise me to see the trailing stop like move up under this little pivot low right here. So quite frankly, I haven't even talked about this yet, but look, there's a parabolic stop that's kicked in on this at 62.15. So that's basically what I'm talking about here. As of last night, let's see, this low right here is 60.42, and so parabolic stop basically, oh, I'm sorry, the parabolic stop would have kicked in under this one, so that would have gotten tagged yesterday. Okay. I hadn't drawn it on here or really paid much attention to it because they've been kind of rare lately, but there you go. I'll go ahead and put that on here just because we don't talk about these too much, but there you go. So the parabolic stops, 62.19 was the low on Monday, and so 62.15 parabolic stop is typically just under the low of, and obviously that's a parabolic move. I mean, look at that gap up. So basically, if you were following the P stop, you'd have just been out of this yesterday. P stop 62.15, and a happy camper, right? Be a pretty happy camper. Sometimes you get a move like this. I mean, that's a breakaway gap. You had 2 days just breakaway gap, and then obviously this reversal day, and so that wouldn't have been a bad place really to just go ahead and lock it in and move on. But however, the way that we have the system designed is that only the T stop, only the trailing stop is going to close the position. And so in theory, this T stop is going to ratchet up, and if this stock, is getting ready to make another move, I always talk about discretion, and so I'm going to be honest with you. If I was still in this, I would just go ahead and use that right there. So let's see, I'll make that orange. There we go. At this juncture, as we sit here right now, yesterday's low is obviously the perfect place for a stop, and so there you go. And so, hey, you can play the system any number of ways, and if you go to the strategies page, we even discuss at length how you can use some discretion. And discretion involves, deciding which of the trades you want to take, right? Like maybe Walmart and Pfizer just aren't enough action for you. And so something like this, and that's why we show the ATR on the pending trades, is because the average true range is going to give you an indication of what you can expect as far as price movement from the stock. So anyway, last but not least is GDS. And this thing has been open since 11/27, right? So, geez, that was right around Thanksgiving. And the funny thing is, I didn't have big expectations for this. It just goes to show you, what I think's meaningless, just because it spent, a month just chopping around sideways, looking like it was going to tag the stop any day, and somehow or other managed to make this move and then come right back in. And then just recently, this move is just sort of kicked in here this year, right? There's New Year's Eve right there, and so far this year, it's made a fairly significant move. So there you go. Sometimes patience pays off. As of, let's see, as of right now, it's down, 1.75%, but as of last night, it was, up almost 16%. So that's nothing to sneeze at. Looking a little bit. It's looking a little rough right here, because typically you get this sort of run up, and when you see a high that looks like that, but not always. This run up here was a little different because it happened in 4 days. This is a little bit more gradual, but when I sit back and look at this chart, there's a decent chance that we're going to get a little bit of a sell down here. So interestingly enough, look at this run over here. This run right here, You had a big sort of run up, and then nasty sell down for a couple of days, and then it bottomed out and turned right back around and made a bigger run. And so that's why the trailing stop tends to hang back a little bit. On this particular stock too, there was also, and this must have kicked in a couple of days ago, right up there. What's that low? 102.27. That low is 102.68, so the P stop would have actually, yeah. I can always tell where the P stop kicked in because I know it's basically just below the low of parabolic day. So it wouldn't have been below the low of this day because it's above it. So anyway, yeah. If you were following the P stop, then you'd be out of this basically, today. And of course, on a stock like this, the idea of the system is kind of laid back. You don't have to sweat the nickels and dimes, and so yeah, it gapped below the P stop, but who cares, right? You sell it at your convenience. The idea is that the stock did sort of make kind of what we'd call a parabolic run up, and that's when the P stop kicks in. And typically, you can look at this. So look at the higher lows in a row. You had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So there's 11 days in a row. This stock, the low was of that. The closing low, the low of the day was higher than the previous day's row for 11 days, and so mathematically, that's what the system is going to look at something like that and say, well, this stock has made a parabolic move. It's not necessarily about percentages, right? Like if we look at NEO, here, it's a whole different sort of story because you did have some runs here of a few days where you had higher lows, but you didn't have like 11 in a row. And so it's not really about the percent move. It's about the system looking at different things like that. So anyway, both of those have got parabolic stops for different reasons, but they're going to look pretty good in the closed trades, however you decide to play them. So let's see. I guess we could take a quick look through the pending trades again, just to see what's. I've noticed there's a couple on here. Oh, here's something real quick. Let's go back to this one that's triggering in today. It kind of, when I first looked at it, and by the way, these charts are delayed now, which is what it is, but they're easy to draw on, so I don't really care, right? It makes no difference to me because I got my trading computer over on the right there where I can see exactly what's happening in real time. But this thing's just like, it's basically like pulled back a little bit at the open and it's rallying up now. It's at 124.50. And so, I mean, it's looking okay. It's just took a little dip there. And sometimes when you look at a chart and you see like, a red bar and it looks like it's headed back down, and the market has a habit of opening and selling down a little bit and then just rebounding, right? I mean, it's almost it's almost, I've noticed that so many times recently, and that's just sort of the character of things. I'm waiting for it to change, right? But a lot of times, or the opposite happens. The market will open and then sort of rally up real big and then spend the rest of the day drifting down. And it's kind of funny how that works. So anyway, all right, real quick, let's just look around. I'm not a huge fan of this ETF here for whatever reason, but this is actually like a commodity ETF, and it's got pretty low volume too. So. But the pattern is the pattern. This looks like one where it actually got stopped out back over here. It was just a really weird sort of triggered in and then just traded down a $1.30 and hit the stop. Boom, full stop out. So it happens. Um, but anyway, so I'm not a huge fan of that one. It's the price of coffee. It's basically the coffee ETF. It's pretty thin, but well, here's the thing. I just interestingly enough, I pointed out that commodity ETFs are starting to commodities themselves are starting to pick up. So this could be at the start of this could just be the start of a big run back up towards these highs here. So Colgate-Palmolive, huh? This is kind of a funky looking setup right here. But at the same time, this one's just, I mean, this is just now hitting the list, and so it's gonna be a long time before this thing triggers in, right? I would guess. Look at this. This was crazy over here. You know, this was almost something similar. This stock has some weird price behavior. So, you know, it was going along and it like sold down a couple of days, and you know, at the time I was probably like, this is ridiculous, and then it just straight up for like 5 days. But anyways, what I envision happening here is, and I'll go ahead and mark this just so that we can, since it just hit the list here, I'll go ahead and mark this 85. This is most likely going to trigger in way out in the future, you know, closer to where the price is now, maybe even lower, right? Like this thing could end up triggering in, if it stays on the list, this could end up triggering in like the stock bounces around and sells down even more, and then there's like, you know, a trend line forms like that, and right, so it's starting to look familiar, right? So that's why, you know, that's why I go through and sort of demonstrate kind of how this works. And so, you know, the idea is that when they first hit the list, you almost just say, okay, well, this, you know, it's starting to set up. Ideally, it's going to do what it's going to do, and then out in the future, this will continue down, and it may or may not move every day, but it'll continue down, and then out in the future. So when a stock is first, especially when they first come on the pending list, that just means that it's potentially setting up for sometime out in the future, right? It's very rare that, move on to the next one. It's very rare that a stock will hit the pending list and then trigger in, you know, immediately or right away, but I mean, it can and does happen. Wow, this is pretty interesting. I'll be honest with you. This is the zigzagging on this chart is, I haven't looked at this in a while, obviously. Look at this. I mean, this is like perfect little sort of sell down there. Perfect sort of little sell down happening here. You get that pivot low and it starts to come up. It's already coming up. It's got a little ways to go, right? This one's got a little ways to go here, so we'll see. See what happens here. Ideally, you'd get a little bit more of a, and I'm drawing this based on today. Be interesting. A little bit more consolidation. I don't know. It does. Here's what's great about this particular stock is that once it has its little pullback and starts going in the other direction, well, yeah, there was a little bit of a dip here, but it tends to, and here's one over here, I mean, it tends to, when it changes trend, tends to carry pretty well, so worth keeping an eye on. And then there's Boeing here, right? And this is the last one, so I expect that there will be. I mean, the market hasn't had a pullback, right? Although we are starting to see some large cap stocks pull back. It's kind of there's a little bit of a yellow flag in the market because a lot of speculative stocks are, you know, ripping higher and outperforming and this and that, and a lot of the a lot of the big cap stocks. There's almost like, they they love to say rotation on CNBC from growth to value and this and that, but this is like probably the best, most interesting example of like a pending of the pending trades. The trigger price on the pending trades sort of ratcheting down, right? So there you go. And so at some point, I mean, this will, and look at that. This is the fourth one that I've drawn on here. And I'm only drawing these on the Wednesday show too. Now they look like, it's not going to change very fast, but it is what it is. And so it is what it is. And so, theoretically, if this price comes down, this could end up triggering in, down here at even lower. It could continue to migrate down. Now, for whatever reason, it dropped. If it just tanked down here, it would most likely drop off the pending list. Excuse me, I'm choking on my coffee here. So there you go. That's essentially how it works, right? Hits the pending list, and it's a matter of price and time, and looking pretty good. Honestly, it's a pretty good setup in Boeing. Funny thing about Boeing is that they've had a lot of bad news, and yeah, it matters sometimes, and sometimes it doesn't. But right now, it's having a pretty good sell down. So when this, when and if there's a trend line break and a change in trend, you see how it ripped higher over here. So there's a lot of potential there again. All right, well, thanks for tuning in. I'm going to go ahead and wrap this up, get something to drink, and I will see you guys back here next week.